morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, September 1st. New start of the month. Thank God August is over. Hopefully this week will be the last week and then everybody gets back to work. A lot of the top-tier traders come back onto their desks, and then we'll really see what happens. Now, we had some really crazy volatility the last several weeks of August. Where does the market go from here? Does the market continue? Well, if you look at the Traders Almanac, as we all know, September and October are usually notorious for heavy volatility and obviously selling. The first week or so of September generally produces a small gain where the second part of September really gives it all back and then loses on the month. So be careful with that. Now, again, Traders Almanac, we know history usually repeats itself, but nothing really to trade off of, but you need to keep that in the back burner of your mind. Now, I want to show you a couple of indicators. As you all know, if you guys follow me for quite some time, the McClellan Oscillator, a very reliable indicator, reads the market overbought, oversold. We're basically neutral right now, but that's going to change. This morning, we're down about 300 Dow points, 44 S&P E-mini points today. China came out and missed their PMI number, and the market just took a really big tumble in the Asia and European session that's currently going on now. Not really good. You could see China now is in the forefront of everybody's mind, where they put it on a back burner the last couple of years, and now it's coming to fruition. So we've had a great run. We had a great rally for the last 6 years, and now we're starting to correct. If you remember early last month, I was looking for more of a euphoric buying going into August on the light trading, light volume month, and then look to correct sometime September, October. Obviously, that did not happen. It's the opposite now. And remember, news trumps the charts. News came out real quick in, I believe, sometime in second week of August, and then that was it. China's been on the forefront. We also have, obviously, the Fed knocking on the door, looking to raise rates. Is that going to happen in September? Not sure, but I believe they meet September 21st. So that's going to be an exciting day to see what they do based on what's happening right now to the market. So we're going to have a big gap down in the morning. Do we buy that gap? Well, we don't know yet. It's a little too early, but I am monitoring the volume on the ES electronic contracts. If that happens, then it may be a shot where you probably could buy the market. But if you're not used to the quick volatility, definitely step aside. You have a small account. Definitely do not trade, in this type of environment. Let the market settle in a little bit, okay? Anyway, McClellan Oscillator neutral, but that's going to change. We should open down somewhere about negative 30-40%, maybe even more, depending on what happens this morning. Okay, bullish percent. You can see the bounce for 3 days, only 32%. Not good. Telling me we have extreme weakness in the marketplace. Okay, if the market was strong and we had a really good rally, we would be back up above at least a 40-50 percentile here, which we're not even close. Okay, not a good sign yet. Again, the 20-month moving average closed below it. Okay, very bad sign for the longer-term investor. When that happens, a lot of fund managers, a lot of money managers, they look at the daily 200, weekly 200 day moving average, or the weekly moving average, and now we have the monthly breaking down. Not a good sign. This has held all the way since 2011. So keep that in mind. We're going to need to see that happen in September. Now, if we get 2 consecutive closes below this 20-month moving average, I think that would confirm that we are now in a phase of correcting. Usually, see what happens here. We came back, and we just came back and recaptured that 20-month average. So I'm not going to put too much emphasis on that. If we do get 2 consecutive closes below that, then I'm going to probably say that we're definitely in a full-fledged correction right now, and then we'll see where the market goes from here. Okay, but you can see that the selling has been fierce. We had a large amount of market on close to buy, and then the market sold off so fast that I believe almost every fund manager sold into that. We had the rebalancing because it was the end of the month, so not good, not a good sign, where we have mutual fund inflows come in, rebalancing, coming in to buy, and ended up really getting clobbered at the end of the day. So not a good sign at all, guys. Here's that daily S&P. I had the Fibonacci retracements on here. You see that? This is that band of resistance. Held that band to the T, 50%. Didn't even get to the 61.8, and now it's going to roll. Spiders are going to be down. I think the spiders are down about 193-ish. That's going to break that 38%. and be somewhere right around this area. Now, we could sell off and make a higher low from this previous low. That would be bullish, but that hasn't happened just yet. Qs. Very strong rally back. That was a good sign for the bulls. We're almost to the 76.8% retracement, and sure enough, we started to roll again. And as you can see, the Qs will be all gap opening down, as well as all the other indices that I'm showing you here. IWM, good leader of risk, right? Another leader, definitely identifies risk on, risk off to investors. And what's happened, we haven't even rallied above the 38% retracement here, and it's that zone that I put out a while back. Not a good sign, especially when you have Russell, which usually tops or bottoms before all of the other indices. This is a bad sign, a bad omen that's telling us that we're definitely correcting. Now, how long or how big is the correction going to happen, and how much is going to be? No one knows, okay? Generally you get an 8, 10, 12% correction. We've had 11%, almost 11% correction last week in 4 days. So that's pretty crazy. All right, so let's take a look at the transports. Keep an eye on the transports. They usually start to bottom sometime in September. Could give you a good seasonal trade here if you look at some of the rails of the truckers or even the airlines again. All right, but watch the airlines because they do get affected by what oil is doing, okay? But you can see here, really bad. I mean, this is not a good sign at all. Back below this downtrend line, and we haven't even really bounced. This is not even considered a bounce to me anyway. So look for that low. Look for that low from last Monday. That's going to be probably the downside target. And then we'll take it one step at a time. And here's the diamonds again. Just rallied under 50%, and then now diamonds are going to open down 300 points from here. Okay, so really pretty ugly trading, guys. So be careful out there today. Definitely use your stops. If the market's too fast for you, step aside. There's no reason to get involved with something like this. There'll be plenty of opportunity. As you can see what's happening, the opportunity is there. Just identify your experience. If you're able to trade this volatility, great. Hats off to you. If you're not, take a step aside, watch the markets, learn from it, and be ready for the next move. Have a great day. We'll speak to you tomorrow. Take care.